Are you investing in ETFs? Then you better do it right, because if not, this could cost you as much as 262,988 euros. Why? Because there is a right way to invest and there is a wrong way to invest that will cost you a tremendous amount of return every single year. You can get a return of 2.25% per year, but you can also get a return that is 1,407% higher than that. Because after watching this video, you will know exactly how to use every single investment the way it's supposed to be. Ready? Then let's make you a lot of money in this PerFinEx investing video. Before we come to the most popular answer you guys give us in meetings when we ask you how long you would like to invest, let's look at the most popular German investment. Or maybe I should say investment, because 41.7% of the total 7,716 billion euro assets private households have are sleeping on bank accounts. Bank accounts are easy and flexible, and that's why many people love them so much. And they are necessary, of course. I have a bank account too. But as of making this video, the best interest rate on bank accounts in Germany is 2.25% only. This 2.25% will work as the base return for this video, because I want to show you the longer you are willing to invest, the higher your return will be. Which also means that the flexibility you might value so much is costing you a fortune. Now 2.25% is much better than a couple of years ago when we paid 0.5% penalty interest so banks store our money. But still, a minuscule return compared to the 1,407% we will have later on in the video. So, if you still get 0% interest on your bank account, visit the calculator that is linked in the description to find the highest interest rate in Germany. And also check for special promotions where you can get up to 150 euro currently when opening an account. You just click on the blue button on the right and get your bonus. Easy money. And for everything else, aside from your daily transactions, give up a little bit of flexibility to increase your return by 63%. Which is the learning for you guys that I want you to take away from this video. If you are willing to give up just a tiny little bit of flexibility, you can easily double, triple, or even tenfold your return. And if you are a little overwhelmed with all the different options and are not sure how and where to get started, you can book a free meeting with us on perfinex.de/meeting so we can help you out. Everybody should have an emergency fund. 2 to 3 months of expenses saved up just in case something happens and you spontaneously need some cash to fix a problem. And instead of keeping your emergency fund on your bank account, where you also run the risk of accidentally spending it, how about you open a high-yield savings account, which gives you a 63% better return than the best bank account in Germany. As of making this video, the Swedish TF Bank gives you 3.66% interest and your money is still flexible. It's a Tagesgeld account, so you can still access your money daily. Not in real time anymore, like with the bank accounts, but still daily. Now what if you are willing to lock your money away for a year? Then you can increase your return by 141% compared to the bank account with a fixed-term savings account, Festgeld in German. Who should get one of these accounts and who should focus on the investments with an even higher return? Well, Festgeld is absolutely perfect for everyone that has a big goal 1, 2, 3 years from now. Buying a property, a car, a yacht, anything you can think of that is more expensive than your emergency fund. And for complete transparency, you can also get more because the Cyprus bank Freedom24 gives 7.97% on savings accounts in US dollar. But there, you run the risk of the currency exchange rate going against you. So it might be better to have a savings account in euro and use the other investments we'll talk about later on for the higher returns. Now the question some of you might be asking themselves now, is my money safe with Freedom24 in Cyprus? Because this sounds a little fishy, no? At least it did to me in the beginning. The Freedom Holding Corporation is listed on the Nasdaq exchange in the US and has a banking license here in the EU and in Germany. So your money is as safe as it is with any other bank operating here in the European Union. If the bank goes bankrupt, government steps in because every customer is insured with up to 100,000 euros each. The most common answer when we ask you guys in meetings how long you would like to invest is, I don't know, 2 to 3 years maybe, which makes financial planning a little difficult because it puts you right in between two chairs. You can go the safe route with the fixed term savings, or you can start investing in ETFs. Probably your guy's most favorite investment because you don't realize how much return you're missing out on. I love ETFs. Almost all our clients invest in ETFs. I invest in ETFs myself. I think they're great. But some of you guys use them wrong, which will cost you hundreds of thousands of euros over your lifetime. In the video 2 weeks ago, we discussed how you can become a millionaire with an average salary here in Germany. And the savings rate we used there was 555 euros a month. Now let's say you are 30 years old right now and invested 555 euros a month into the stock market with a historical rate of return of roughly 7% per year. Will you get 7% if the stock market returns 7%? No, you don't. Why not? Because you have to pay 25% capital gains tax on every dividend, on every sale, every rebalance. Even if you don't make a real profit, you still have to pay taxes every single year because of the Vorabpauschale. And that's why, even if you use one of these €0 mobile brokers, you will pay 228,000 euros in taxes and fees for the ETF. You will have almost 1 million euro in your account. That's true. But almost 25% of that belongs to the government. And if we deduct the taxes and the fees from your return, your 7% go down to 5.15% return per year. Which means your return is not 211 times better as we thought earlier. It's in reality only 129% better. Worse than a savings account. Who would have thought that, huh? So it only makes sense to put your ETFs in a mobile broker if you want to invest for 5 to 10 years maybe. Something like this. Because if you give up a tiny little bit of flexibility, you can achieve a lot higher returns. How much return exactly? The second best way to invest in ETFs is with a private pension level 3. You're not going to get tax benefits right away, as with the base pension level 1 we'll talk about later on, but you'll get a lot of tax benefits when withdrawing your money. And that's why you will have almost 1 million euro in your account with the same variables we had earlier on. Mainly because you will have to pay 64k in taxes and fees only, compared to the 228,000 you have to pay in the broker. And that's why you will have 262,988 euros more with ETFs in the pension. 37% more money compared to the broker. Absolutely insane. And all you have to do is to give up a little bit of flexibility, because the tax benefits from the level 3 pension kick in at the age of 62. And there's another way to get even more tax benefits when investing in ETFs. But before, let's talk about the investment with the highest return if you are willing to invest for 10 years. Real estate. When buying a property, you have fundamentally two options: buying a new property or buying an existing property. What's better? That depends on your personal investment strategy. But what's better from a return perspective? Certainly the existing property. And here's why. Here's a property from perfinex.de/properties in the area of Stuttgart. It's a completely new construction for 240,000 euros. Whoever of you guys buys this will not pay 240,000 euros out of his own pocket, of course. You will get a mortgage. If you pay for all the closing costs and make a 10% down payment, your investment will be 40,000 euros. The rest will come from the bank. And now, if we factor in that the property might rise in value, you will get rental income, but you have to pay a mortgage and taxes eventually, your return on investment will be 8.47% with this property. Lots of numbers on the screen and lots of calculations to get to that return. So if you want to deep dive and see exactly how we get to this return on equity number that matters most for real estate investors, you can watch this video. 8.47% is 64% higher than the ETFs in a broker we talked about earlier, and it is also 276% higher than the bank account, making this way of investing the third best on our list. And when talking about flexibility, you would need to hold your property for at least 10 years, because after that you can sell it completely tax-free. To get an even higher return, 299% higher, with ETFs in a base pension level 1, you need to invest longer than 10 years. When you invest the same 555 euros a month with a 7% rate of return we talked about earlier, you can get a 42% tax benefit, which would be 2,797 euro in this case. Now this is real money which you get from Finanzamt when filing your taxes, so you can reinvest it again next year for maximum tax efficiency, giving you again 42% the year after. And with the same variables as we had in the other ETF examples earlier on, you would get a total of 168,000 euro tax benefit until you retire, which would grow to 682,000 euros over time, because it's invested in ETFs. Now let's compare this with the other ETF investments we had earlier on. In the broker, you had 720,000 euros because your return was 5.2% only. In the pension level 3, you had 983,000 euros because your return was 6.5%. And here in the base pension, your return is 9%, and you will have almost 1.8 million by the time you retire. Picture this. If the underlying ETFs make 7%, you will get 9%. Now, if that's not a way to make the most of your money, I don't know what is. So is the base pension the absolute best way to invest in ETFs for absolutely everyone? It depends how much flexibility you are willing to give away, because here your money is locked until the age of 62. And after that, you can withdraw it as a monthly pension. The highest return when investing in ETFs, but also the lowest flexibility. And now, ladies and gentlemen, we come to the investment with the least flexibility, but by far the highest return. 1,407% higher return than our bank account with 2.25% interest. I'm talking about investing in real estate with a little trick called cash out refinancing. What would be the best way to invest in real estate from an investment perspective? Buying a property with 100% financing, meaning you have to invest not even 10,000 euros to buy this example property in Nuremberg for 200,000 euros. And what would be the best way to invest in real estate from a tax perspective? Buying a renovation property which gives you 17,000 euros tax benefits, just like this one that you can find on perfinex.de/properties. And now, if we do the same calculations as with the other property earlier on, starting investment, rental income, mortgage, tax benefits, we see that the overall return is quite similar with 7.85% per year. But what is different here is that we didn't make a down payment and invested 30,000 euros less than in the previous example. And if we calculate that, the return on equity, the return that really matters for real estate investors, goes up to 33.9% per year. 33.9% per year. I get that this might sound a little unrealistically high to some of you because we rushed through the calculations a little bit. So if you want to deep dive into the most efficient way to invest in real estate with the highest return possible, you can watch our video about cash out refinancing. And again, similar to the base pension with ETFs before, highest return, yes, but also lowest flexibility. If you build your real estate portfolio with 5, 10, 20 properties, and you get a mortgage for every single one of them, you cannot just suddenly decide you don't want all of this anymore. You will have to pay your mortgages, otherwise the banks will take your properties away from you. And to make sure this doesn't happen to you, you might want to book a free meeting with us on perfinex.de/meeting so we can do it the right way together. And we make sure you are not building your house of cards that will crumble eventually. What did we learn in this video? The one and only solution from us Germans is to let all our money sleep on bank accounts. But now we know that this is a very solution with a very low rate of return. The one and only solution from the internet is to download a mobile broker and invest all your money into that, because you are flexible. And what I wanted to show you with this video is that this flexibility will cost you a lot of money. You can easily double your return when investing in ETFs if you increase the tax efficiency. And you can fivefold your return 500% if you're willing to put your mobile phone down and give away just a tiny little bit of flexibility. I appreciate you watching this video until the very end, and I'll see you next Sunday.